Hi students, good morning. Today I am going to teach you +1 Accountancy. Lesson 3, Books of Finance, Last Part, Journal Entries. Okay. Hi students, good morning. Today I am going to teach you +1 Accountancy. Lesson 3, Books of Crime Entry, the last part, Journal Entries. Okay. So I have already taught you many sums from journal entries. Now I am going to teach you and some of the sums from the journal entries. Take question number illustration 10, page number 53. Illustration 10, page number 53. Illustration 10, page number 53. Derry is a sole trader dealing in automobiles. From the following transactions was journal entries in the month of January 2018. Derry is a sole trader. He is dealing in automobiles. He has given some transactions for the month of January 2018. For the transactions we have to prepare the journal entries. This is question number illustration 10, page number 53. So, illustration 10, page number 53. While you preparing the journal entries, okay, we have to use only single side of the accounting notebook. So, the format is in the books of Derry. In the books of Derry. Journal entries. Journal entries. This is the topic you must enter in the center of the first accountancy notebook. Okay, you have to take only. You have to use only single page. In that single page, you have to write in the center in the books of Derry journal entries. The format is date, particulars. LF, debit and credit. Yeah, listen. I'll read the transaction. First transaction is 2018 January 1. Commenced business with cash rupees 1 lakh, with goods rupees 2 lakhs, with building rupees 5 lakhs. It means usually a businessman will contribute only cash, but in this sum he contributed as capital 3 items. One is cash, he contributed rupees 1 lakh. Goods is nothing but what? Stock. Goods is nothing but stock. Stock is rupees 2 lakhs, and building he contributed as 5 lakhs. So the 3 items he contributed as capital. Okay. See, all the 3 items are asset. I already told you all the assets are real account. Okay. Here, who contributed this as capital? Derry. So Derry is a personal account. Okay. As per the rule of personal account, credit the giver. So Derry only give these items. So credit will come in the credit. Derry capital will come in the credit side. All the assets as per the real account, debit what comes in. So cash, stock, building will come in the debit side as per the real account rule. Debit all what comes in. So here Derry contributed capital. Okay, so Derry only contributed. Derry only gives. So Derry will come in the credit side. All the assets will come in the debit side. What is the date? January 2018. You put 2018 January 1. What are the assets she contributed? Cash, account, stock account debtor, capital, then building account debtor. So three items she contributed as capital. So who contributed? 2. There is capital. 2. There is capital account. There is capital account. How much? 1 lakh, 2 lakhs, 5 lakhs. So 1 lakh cash, 2 lakhs stock, 5 lakhs building. The rule is debit should be equal to credit. So you add all these, 8 lakhs will come. So there is capital 8 lakhs. Okay. The rule is debit item should equal to credit items. Okay. So debit is totally 8 lakhs. That 8 lakhs contributed by Derry. So there is capital account 8 lakhs. So started business with cash, stock, building. So this is the narration. Narration is must. Whenever you write the transaction, you must write the narration. Without narration, you should not write the transaction. Okay. So this is the first journal entry. So what we have to do? First we have to read the transaction. We have to find out what are the items are available, accounts are available. Here 4 accounts are available. One is cash, another one is stock, another one is building. So these 3 are assets. So assets are real account. As per the real account rule, debit what comes in. So these all are comes inside of the business. So that is why I debited all the 3. Now they only contributed all these as. Okay. So they only given. So as per the personal, because there is a personal account. As per the personal account, you should use only credit because already debit was there. No. So credit is what? As per the personal account rule, credit the giver. Who gives this? There is capital. There is only given all this as the name of capital. So that is why there is capital will be credited. Now, second journal entry. Purchased goods from A and company for credit. Purchased goods from A and company for credit. Here purchase of goods is nothing but purchase. Purchase of goods is nothing but purchase. Okay. Purchase of goods is nothing but purchase. So purchase account is a nominal account. Purchase account is a nominal account. That is expenses. Okay. What is the rule of nominal account? Debit all expenses and losses. So as per the rule of nominal account, the purchase account will be debited. Okay. And one more account is there, A and company. A and company is a personal account. As per the rule of personal account, we must say the rule of credit entry because debit already come, purchase account already come. So credit rule of real personal account is what? Credit the giver. Who is giving these goods? Actually, I am purchasing the goods. Who is giving these goods? X and company is giving the goods. So the date is what? Second date is what? Second entry is date is second date is what? 2. Okay. Entry is what? Purchase account debtor. Purchase account debtor to A and company, because A and company only giving the goods. A and company account. How much? Rupees 3 lakhs. Rupees 3 lakhs. So debit side rupees 3 lakhs. Credit side rupees 3 lakhs. Okay. Narration. Purchase of goods for credit. Purchase of goods for credit. Okay. This is the second journal entry. What is the third transaction? Cash deposited into bank rupees 80,000. Cash deposited into bank. First we have to find out what are the accounts are available in the transaction. Cash, bank. Cash, you are taking the cash from your business. Derry is taking some cash from the business. and she will deposit it into the bank. So cash, bank, two accounts are there. Cash is real account, bank is personal account. So one account will come in the debit, one account will come in the credit as per the golden rules of accountancy. Okay, now you tell me real account first, because cash is real account. No, real account rule is what? Debit what comes in, credit what goes out. Debit what comes in means anything will come in the business, that is debit. But here there is no rule of real account debit rule, because here cash is going out. Cash is going out. So as per the real account, cash account will come in the credit side, because cash, I am taking the cash and I am depositing into bank. So cash is going out. So cash will come in the credit side. Cash will come in the credit side. Then who will come in the debit side? Who is receiving this money? Bank is receiving the money. So bank is the personal account. As per the debit rule of personal account is what? Debit the receiver. So bank is the receiver. Cash is going out. So bank will be debited, cash will be credited. So bank will be debited, cash will be credited. How much? Rupees 80,000. So date is 3. Bank account debtor 2. Cash account. How much? Rupees 80,000. Rupees 80,000. So debit 80,000, credit 80,000. Okay. Yes. Narration is what? Cash deposited into bank. Cash deposited into bank. Okay. Come to the next transaction. Date 4. Purchase of goods from B and company. Before that we purchased from A and company. Now we purchased from B and company. We can purchase from so many creditors. That is not a problem. Okay. Now I purchased some goods for my business from B and company, and payment made through debit card. I told you 7 or 8 items related to bank account. Debit card, credit card, NEFT payment, RTGS payment, ECS, that is electronic clearing scheme, cash deposit machine, CDM. Okay, so these all are, and check, these all are related to only one account, that is bank account. Okay, these and all will come means you have to mention bank account. Okay, now debit card related to bank account. Bank account is a personal account. Now I purchased goods from B and company. Okay, then immediately I am giving the amount through debit card. That is, I settle the payment. What is the amount? Rupees 5,000 I purchased the goods. Okay, immediately I settle the payment. So here purchase of goods is a nominal account. So nominal account will come in the debit side. That is all expenses and losses. Purchase of goods is expenses. So purchase account will come in the debit. Okay, who will come in the credit? Suppose I made the credit purchase means why B and company will come in the credit side. But I immediately settle the amount through debit card. So here name of the person will not come. Instead of name of the person, what are the source I have used? That is bank. So bank will come in the credit side. Bank will come in the credit side. Understood or not? If suppose I did not pay the payment, the person will come in the credit side. If I made the payment through cash means cash will come. Suppose bank means bank will come. So here the journal entry is purchase account debtor to bank account. Purchase account debtor to bank account. Okay. Yes. So the fourth entry is purchase account debtor to bank account. Fourth entry, date 4. Yes, date 4. Purchase account debtor. Purchase account debtor to bank account. To bank account. What is the value? Rupees 5,000. Debit 5,000. Credit 5,000. Okay. Narration. Purchase of goods. Okay. Purchase of goods. Okay. So this is the fourth entry journal. Next. Date 5. Paid A and company through RTGS. Rupees. Okay. listen, here rupees is not given. It means already we made the credit purchase to A. How much of goods we purchased from A and company? That is for rupees 3 lakhs. Now, actually we purchased the goods from A and company on 2nd of January. Now I am paying the amount, that is I am settling the amounts on 5th of January. Okay. So now I am giving the payment to whom? Whom? A and company. Then A and company is the receiver. A and company is the receiver. I am giving the amount. Delhi is giving the amount for purchase made. Okay. Now the amount is receiving by who? A and company. I am giving as RTGS. RTGS is nothing but what? Bank account, real time gross payment. Okay, so RTGS is a bank account, and I am giving the payment through bank. Who is receiving this amount? A and company is receiving the amount. So here bank account is the personal account, A and company is also the personal account. Both are personal account. Now you tell me, one account will be the debit, one account will be the credit. Debit the receiver, credit the giver. Who is receiver? A and company is the receiver. Okay, bank is giver. So through bank only I am paying, no. So bank is creditor. A and company is the debit. Okay, so A and company account debtor to bank account. To bank account. What is the amount? Amount is rupees 3 lakhs. See, here the amount is not given, but already it has given in the date of 2. So you can use that amount only. Okay. So purchase, that is payment made through RTGS, or payment given by RTGS. Okay, what is the next transaction? Date 6. Date 6. Sold goods to C and company and a check received for 50,000. Sold goods. Sales. I already told you sold goods is nothing but we are selling the goods. That is called commonly sales. Purchase of goods, purchase. Sale of goods is sales. Purchase of goods and sale of goods all are nominal account. Purchase is expenses, sales is income. So when we selling some goods, we will get some money from the person who will give. Okay. So here we are delivering the goods to C and company. For that we are getting some payment through what? Check. So I received the check from whom? I received the check from C and company. I received the check from C and company. Yes. Listen, my dear students, this is very, very important journal entry. Here I made some sales to C and company. Okay. Now C and company has given some check. Okay. But I received the check only. It is in my hand only. Suppose I deposited into bank, means the bank account will come. Suppose any checks I received, only I received. So here they have mentioned only received. Received means you must mention only cash. You should not mention as bank. When you mention as bank, when you deposited into the bank only. Okay, just you received the check. I sold, the dairy sold some goods to C and company. C given the check only. You received the check. So whenever you receive the check means you should not, check is related to bank account only, but the check is not deposited into bank. So the bank account will not come here. Here cash account only will come. Once you deposited into bank only, bank account will affect. Okay, so here you received only check, so you should not use bank account, you use only cash account. Here sales account is your income, so as per the nominal account rule, credit to all incomes and gains. So sales account is always credited. So then who will come in the debit? cash account will come in the debit. See, you should not put bank account because you did not deposited that check into bank. Till you deposit, you must enter cash account only. Okay. Once you entered, you can put bank account. So you receive the check. So it is in your hand only. So it means that is cash account only. Okay. So cash account debtor to sales account. So answer is, date is what? Date is 6th. Okay. 6th. Cash account debtor. Cash account debtor to sales account. What is the amount? Amount in rupees 50,000. So debit 50,000. Credit 50,000. Okay. Sold goods to C and company. Okay, what is the next journal entry? Date 7. Deposited the check received from C and company with the bank. Now, actually, you made the sales to C and company on 6th of January. He given the check. You received the check on 6th January. Now you depositing the check into the bank. Now only you are depositing this check into the bank. Okay. So listen carefully. So when you received the check, it is in your hand. You treat it as cash only. After depositing into the bank only, it will convert it to bank. Okay. Now that check, yesterday you received, that check, now today you are depositing. On date 7 only, you are depositing into bank. So now actually the check is in your hand. So when the check is in your hand, you treat it as cash only. This cash, now you deposited into bank. So cash deposited into bank. Entry is what? The bank account debtor to cash account, because this amount is received by the bank. So as per the personal account rule, debit the receiver, bank will the receiver, cash is going out. So bank account debtor to cash account. Bank account debtor to cash account. Bank account debtor to cash account. So bank is receiving this check. So bank account debtor to cash account. What is the amount? Amount is rupees. How much we deposited? Sorry, we received 50,000. So the 50,000 check only we are deposited into bank. So bank account debtor to cash. So cash deposited into bank. Okay. Yes. What is the next journal entry? Date 8. Purchase of goods from Z and company and paid through debit card. Again, I am purchasing some goods from Z and company. For that, I am paying debit card. That payment paid through debit card. Debit card is bank. Okay, you are giving the amount, means that is you treated as bank. But you are receiving the check, but you are not deposited into bank. So by that time, you treated as cash only. After depositing into the bank only, it will be turned to bank account. See, whenever you receive the check from anybody, if it is in your hand, you should not mention as bank, it should be a cash only. After depositing into the bank only, it will convert to bank. Okay. Now here you are paying. You are paying means that is, it is not our problem to deposit. It is the problem of who is receiving the check. Now I purchased the goods from Z and company. Okay, so Z and company is sending the goods to me. For that I am paying the amount through debit card. So it is immediately it will go to the amount to his bank account, debit card. Okay, so please listen. So what happened? So purchased goods from Z and company and paying the amount through debit card. So debit card is nothing but what? Bank. So purchase of goods is purchase account to bank account, because I am paying the amount through bank. Okay, so purchase account data to bank account. Purchase account data to bank account. What is the date? Date is 8. Purchase account data. Purchase account data to bank account. What is the amount? So amount is rupees 12,000. Rupees 12,000. Rupees 12,000. So the narration is purchase of goods. Okay. what is the next journal entry? Date 9. Stationery purchased and paid through net banking. Net banking, bank. So through net banking you are paying the amount. You are purchasing some stationery. Stationery is expenses. For our business we are writing pencil, etc. etc. All are called what? Papers, everything is stationeries. So I am purchasing some stationeries from one company. So for that I am paying through what? Net banking. That is through banking I am paying the amount. So purchase of stationery. Stationeries is what? Expenses. So expenses is what? Nominal account. As per the nominal account rule is what? Debit all expenses and losses. So stationery will come in the debit side. Bank, through net banking, bank will come in the credit side. Okay. So here stationery account at all is debit. Okay. Stationery account at all is debit. So January 8, stationery account data. Stationery account data to bank account. What is the amount? Amount is rupees 6,000. So debit 6,000, credit 6,000. Narration is purchase of stationery. Purchase of stationery. Okay. Now come to the last journal entry. Income tax of Delhi is paid by check. Very, very important journal entry. Income tax of Delhi. Delhi is a proprietor of this business. Okay. Delhi is paying the income tax. Okay. Income tax is personal. Okay. I am doing the business. From that business, I am earning the income. For that, I have to pay the tax to the government. Okay. I have to pay tax to the government. So that income tax is my personal account. So I have to pay the amount from the business only. But here I am taking the amount, I am paying the amount check. Check means what? Business check I am giving. For my personal account, I am using my business amount. Okay. So personal account is called what? Drawings. Income tax is a personal account of the businessman. So personal account of the businessman is called what? Drawings. Drawings is always debit. So the drawings is paid by check. Check is a credit. Check is a credit. Bank account. Bank account will be the credit account. So here the last entry is what? 10. So stationery is 9. Date stationery is 9. Now the last entry is 10. Date 10. So date 10 you put drawings account data. Drawings account data to bank account. How much is paying? 10,000 rupees. So debit 10,000, credit 10,000. Income tax paid by Delhi. Income tax paid by Delhi. Okay. Income tax paid by Delhi. Listen, my dear students. So likewise, you can practice more sums from our exercise. Okay, so there are a lot of exercise sums are there from our book. So you must learn, you must practice all the sums from our textbook. Okay, some more sums also I will teach you in the next classes. Till then you have to practice all the sums from our textbook. Okay, if you have any doubts, you can clarify in the doubt section classes. Okay, thank you.